Hi, everyone. Buckle up. It's going to be a long one. What's been going on, as I've been warning everyone about for 2 to 3 weeks now, the churning in this market. It's looked like churning, it's felt like churning, and if it walks like a duck, quacks like a duck, it's a duck. Boy, oh boy, yesterday, though, it tried to fool me because I got a ton of false long signals everywhere. Everywhere. Look at how many stocks I bolted last night in the new positions page. And it was so much, and so many had earnings come up that I called bullshit, and I didn't take any of them. My eyes, no, 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 no. Something's really wrong with all these stocks triggering these signals ahead of earnings. So, no new longs were taken. Sadly, there was no clear reversal that told me to go ahead and get short ahead of today, but today was ugly. This is now basically a breakout. I guess what we could do here, kind of do this, draw this line here, draw this line here, and I'm not going to do it on the rest of the indexes, but basically this is what we have in all of the index. We've had a nice pennant formation forming, churning happening during that pennant formation. Now we have a breakdown. We have a breakdown everywhere, but this time it's a little bit different. This breakdown is coming from an actual sideways consolidation. The rollover and breakdown in March didn't really happen like that. We kind of just drifted higher and then rolled over. This is the first time since 2011 we've had a consolidation and then a breakdown on heavy volume. This setup is actually a little bit better because we have heavy volume down days churning in our consolidation. So this is a very bad break on the NASDAQ. On the Russell 2000, that thing's already told you that something was wrong as it's been leading to the downside. Now it looks like the S&P 500, New York Stock Exchange, and Dow Jones wants to catch up. This is a nasty break. The S&P 500 was down as much as the Russell 2000 today. That's pretty gnarly. And on top of that, the Dow Jones Industrial Average was down on very big volume. So obviously, with all of this, you can pretty much kiss this market done for now. I would say that, you know what, let's wait and try to see if we can get a bottom here, look for a bottom. And that's true. We can look for support around the 200-day moving average. If we crack below the 200-day moving average and then retake it to the upside, that will be good. However, we need to look at a couple things that's been happening. If you follow me on StockTwits or Twitter, you can look at these charts. I posted the high yield credit chart that shows you that high yield not that one, stocks are like J and K. Look at J and K. They're just done. HYG, J and K, they were leading this thing to the downside before the market was. Not only that, the advanced decline line was diverging. While the S&P 500 New York Stock Exchange were hitting new highs, the NYSE advanced decline line was showing some pretty big divergence. And also on this most recent move higher overall for the market, the NASDAQ 100, the smallest amount of the NASDAQ stocks, was basically leading the tape higher as it was outperforming the NASDAQ. So today's breakdown is very, very, very bad. I haven't made my final decision yet, but if I do go, it will be once again a small portion where I'm only risking about 2%, 2.5% of my total account value with the put positions. But I want to go ahead and buy puts on this market in my margin account. And then in the IRA, I want to go ahead and get long. And what I'm looking at is getting short, possibly more of the semiconductors, and if we do that, it'll be the SOXS. You can see huge volume on today's uptake. I definitely want to get long volatility. This looks to be a real breakout, and if you think it's up too much in one day, I want you to study 2011 when a similar move happened. With this one, it's pretty clear cut. I don't want this thing to trade back below the 50-day moving average. So if I do get long UVXY or TVIX, it's going to be UVXY, I'm pretty sure. The 50-day moving average will be where I won't tolerate any more pain past that level. And at the same time, I really kind of want to get long the financials. I mean, I looked at Goldman Sachs and Morgan Stanley and Bank of America, and it looks like fresh cracks. So, that's always an option. And not only is that an option, oil stocks, ERY, looks like an option. Biotechnology stocks look like they want to break down again, and we got a heavy volume move here. Not too much risk by going long in this one. And, so I think I want to buy puts and semis, biotech, and the volatility calls for sure. So that's what I'm for sure that I want to do is biotech, semiconductor ad, and Yeah, volatility. The oil names, the Dow Jones Industrial Average. I think what we can see is if we back and fill a little bit, retest the 2650 level, well, here, let's be more appropriate with the actual index. We retest the 16869 level, fail there, then we can maybe look to go ahead and put some shorts on in this index. But overall, I just want to make sure I get to heavy cash. And on that note, we have tons of sells, and there's no point in even going over them all because it's everything. If it's breaking down on heavy volume, it's out. So, I mean, GBX, remember, if it's showing a loss, it's out now. Now that we're under a sell signal, nothing will be held for a loss. So all of these stocks that I'm showing you, these are stocks that I still had a position in. I will not have a position in any of these stocks that you're seeing me put up that I'm posting immediately from my little black book that I keep. So as you can see here, this is quite an amazing amount of sells in one day. It's basically our entire portfolio. We're only going to have about 15 long positions in the IRA after this, and 3 of them are inverse ETF positions. So this is a pretty significant down day. Now for most of these, we're leaving with gains. What you're seeing here, we've lost significant amount of those gains, but the bottom line is we're still leaving with gains. The biggest losers also were not hurt too bad in that. Oddly enough, URA, which I never would have expected, has become one of the biggest losers, and that's got to go. And then GBX is the other biggest losers. It was a large position since earnings were already out of the way, and since it's now showing a loss, it's got to go. There are some stocks that are 50% sells. FDX, HEES, CLR. These are all 50% sells. They're not 100% sells, but now here's what we have going on. I will not have these gains turn into losses. So hard sell stops are going on the book for not only these 3 stocks, but also GWPH. Hard sell stop where I took the position. I'll check it out to see what my average fill was on everything, or see what my fill was, and then that level will become my final cut loss. None of these will be allowed to be down more than $1. The most I normally allow in my account to be down per position size is $100. Once something is down $100, it's done normally. And normally when something is down is little. I mean, if anything's down $100, something has gone, wrong. And it's not done. I shouldn't say that, but we start to sell. We start to sell no matter what. If it's down $100, that is 0.02% of my account capital. That's how little I'm willing to lose. And if you have a shitload of them, yes, they start to add up, but it'll still never be anything if you never let it get much further than that. I know I would never let anything be down more than a few $100s, no matter what, in my account, no matter what the position was. Unless it's something like UVXY, then that's just going to happen. It's just going to happen. But the bottom line is, once I'm down 0.02% on any position in my account, it starts coming off. So hard sell stops on FDX at the break-even level. Hard sell stop at HEES at the break-even level, just in case. GWPH, hard sell stop at the break-even level. CLR, hard sell stop at the break-even level. And ENI, hard sell stop at the break-even level. And that is actually 1, 2, 3, 4, 5 of the remaining really 12 long positions. So that means the other 7 long positions I have such big, huge gains that I can wait for a real sell signal before I need to leave. Okay, everyone, it's getting ugly out there, and if you don't believe that, you can see how stocks are acting post-earnings, glue, and then what stocks I was loving, possibly setting up, Qihu, Noah. You can see how they've all turned out. It's time to be defensive. This is the biggest sell signal I have received in my portfolio since 2011. We don't get it that much. I mean, we got across the board. RWR, XRT, you name it, it broke down today. Everything broke down. Everything broke down on heavy volume. Not good. Not good. Be careful out there, especially if you're a permable. Thank you.